Hello and welcome to Jennings Motor Group, and thank you for considering us for your next car. Now, did you know there are a number of ways you can finance your next new or used vehicle? Let me explain how it works. Jennings are credit intermediaries for a range of motor finance companies and some well-known high street lenders. So if you're not a cash buyer, we can take away the hassle of sourcing a loan by showing you some finance options that best suit your needs and personal circumstances to help you with your purchase. So what are your options? Well, first of all, we offer personal contract purchase. That's known as PCP. There's hire purchase, or HP. And finally, one that you might not be so familiar with, personal contract hire, or PCH. So how do they differ, and which one could be right for you? Let's start by looking at personal contract purchase. If you buy with us using PCP, you pay an initial deposit and a guaranteed amount as an optional final payment at the end of the term. The remainder of the loan and the interest is paid by regular fixed monthly repayments over an agreed term. Now, there is an annual mileage limit with this type of agreement, and you won't own the vehicle unless you make the final optional payment. With PCP, you often benefit, though, from lower repayments, and the term can be much shorter than with hire purchase. Now, I did say that the final payment is optional. That's because you have three choices when you come to the end of the agreement, depending on whether or not you want to keep your car or change it. The first option is that you can make the final payment in full and take ownership of the vehicle with nothing more to pay. Secondly, simply hand back the vehicle and end the agreement with no further payments. Or the third one is you can part exchange the vehicle for another new one. Let's now move on to hire purchase, or conditional sale. With hire purchase, you pay an initial deposit and remaining balance, and interest is repaid by fixed monthly installments over a term and at a rate agreed at the start of the contract. You are the registered keeper of the vehicle, but the finance company remains the legal owner until the loan is repaid in full. At the end of an HP agreement, you will be given the option to own the car outright. Simply pay the option to purchase fee, which covers administration costs, to transfer ownership to you. A conditional sale agreement, it's the same as hire purchase. However, at the end of the agreement, you will automatically own the vehicle. Let's now move on to personal contract hire. PCH is also known as personal leasing. It's a long-term vehicle rental agreement which is becoming an increasingly popular alternative to buying a brand new vehicle. Now, you pay an initial upfront rental similar to a deposit, and then fixed rentals throughout the duration of your contract. You won't ever actually own the vehicle with PCH, and at the end of the agreement you return the vehicle to the finance company with nothing more to pay. Whichever option you consider, we're here to help, and we'll answer any questions you have. The only tricky bit is deciding which car do you really love. We hope you found the presentation useful and informative. Thank you for watching.